1.5 million American green dollars per Bitcoin by the year 2030 is what Cathie Wood and ARK Invest are predicting. Now, personally, I think that is a bit of a reach. It's pretty out there, and I don't necessarily agree with this price prediction. But to be fair, ARK Invest always provides really, really good data and reasoning behind any of their predictions. So what I'm gonna do is go over their Bitcoin section in their Big Ideas 2023 report that just came out recently. We're gonna go through it together, but keep in mind that the $1.5 million prediction is not the only one that they have. They also have a base case prediction and a bear case prediction. This 1.5 is just like the blue sky scenario, most bullish prediction out there, right? So let's dive into the report and see what all the fuss is about. By the way, I love these reports and they're really well made. So first page, I think they do make a good point here. And what they're talking about is that the volatility of Bitcoin is shrinking as time goes on, right? Obviously, it's still very volatile. It's still very risky, but this chart on the left-hand or on the right-hand side shows you the peak to bottom percentage, right? Or gap over the years. So first in June 2011, the early years of Bitcoin, that drawdown, the first drawdown it had was about 93, 94%, right? Pretty big, pretty scary. Then in 2013, again, early years, that kind of shrunk or contracted a bit to 87%. In the 2017 cycle, that contracted a little bit again to 84%. And most recently, November 2021 to 2022, that contraction was about 76% when Bitcoin fell into the $15,000 range. Now, there is this quote that I do like, which is there's no long-term stability without short-term volatility. So personally, I don't judge something because it's super volatile, right? I understand that new things like this take time to kind of even out in the markets and be priced in over time because nobody really knows the valuation of a lot of these cryptos. I'm with them on that. That volatility is not necessarily a bad thing. Next slide is something I also agree with, and I think Bitcoin and Ethereum tend to be the punching bag for traditional finance or in traditional investors because they're always like, oh, it's so volatile. And they love to point it out when big corrections or crashes happen, which is funny because Bitcoin's been out a little bit over a decade and Ethereum is closing in on a decade. And since inception, both of these two assets have outperformed every single public company there is, right? So I think if you zoom out enough, right, it's up and to the right from 2009, 2010 to today. So I do agree with them that over a long enough horizon, Bitcoin has outperformed almost everything. This slide is not really too relevant to Bitcoin, but they're basically highlighting that there is a silver lining of the FTXs of the world kind of crashing and burning because that's brought more transparency to existing and future centralized exchanges. And now they're listing their public wallets and it's just flushing out negative and bad practice and bringing together a more kind of cohesive and better transparent space. So sure, that is a great thing. I know right now it does feel like a lot of people have checked out or given up on crypto, which is normal at this part, of a drawdown or cycle, especially with all the things going on in the world. This is also a slide that, makes sense. Institutions are committing to Bitcoin during a bear market. And obviously it's more important to judge people or things by their actions, not by their words. So Fidelity and all the brands in the world getting into NFTs, Fidelity getting into crypto exchanges and Bitcoin, and all these institutions kind of coming in is saying a lot. And it's not something that should be ignored. There is definitely a lot of interest and not just from retail anymore. Okay, so here's the good stuff, right? Here are their predictions, and they actually have some great reasoning on the right-hand side, which I'll get to and explain exactly what their reasoning is. So the bear case prediction, which I think is probably the most likely for the year 2030, is $258,000 per Bitcoin. I know right now that seems crazy. That's about a 10x from the current price. Looking at, kind of their reasoning, it does make sense. Their base case or their neutral case is $682,000 per Bitcoin by 2030, which I think is still, a little bit out there. And then obviously their bull case, it's in the title, it's in the thumbnail. You saw it, $1.5 million by the year 2030 for one Bitcoin. Okay, so now let's get down to it. So on the right-hand side, or what you're seeing right now, is about 7 or 8 categories or narratives or industries that they're predicting Bitcoin will kind of have the opportunity to penetrate or already has. But the question is obviously how much or what percentage of these addressable markets can it kind of penetrate into? So we're going to talk about that. I'm going to explain what they all mean. I had to Google some of them, I'm not gonna lie, but I'll kind of do my best to elaborate on what each of them means. So first one is corporate treasuries, right? Essentially, public companies, big institutions have these treasuries where they have a manager that takes the business's free cash and tries to invest it or hedge and make sure that the company's free cash is not just sitting idle or, falling victim to inflation, right? We recently saw in 2021 how Tesla added $1.5 billion worth of Bitcoin, which is a lot of money. They did sell a little bit after to, let me quote Elon, prove liquidity. But I think since then, they haven't sold anything and they're still holding on strong. Obviously, we also have like MicroStrategy. So that's already happening. That's not something that might happen. But again, the question is how many treasuries will kind of follow suit. So in their bear case scenario, they have 0%. So maybe nobody except Tesla will add Bitcoin to their balance sheet. Their base case is 2.5% of corporate treasuries, and their bull case is 5%, which I think is an awful lot, right? Next up, we have remittance assets. And this is one of those that I had to Google because I did not know what it was. But essentially, it's cross-border payments. A lot of people are immigrants and have family back in their home countries that they send money to. But let's be real, a lot of traditional finance apps, like there's no Venmo in a lot of countries, there's no PayPal, it's not compatible. So they'll have to do like Western Union or get creative. And there's just a bunch of hoops to jump through, right? It's 2023. We went to the moon like 50 years ago, and today we can't send a payment freely across any border. That is kind of weird, right? And I do think this is probably one of those industries where Bitcoin or any crypto will disrupt heavily because it just doesn't make sense, right? It's so easy to send frictionless payments on the blockchain. And their bear case here is 5% penetration, base case is 10%, and bull case is 25%. Moving on to the next, nation state treasuries. Now, this years ago seemed like the biggest pipe dream ever. But when El Salvador announced that it was adding Bitcoin to its national treasury, that was pretty big. And I think a lot of people still underestimate how big of a deal that is, right? Essentially, this is just governments adding Bitcoin to their treasuries, which it's hard to predict, how many will follow suit or if any will. Their bear case scenario is close to 0%. Base case 1%, bull case 5%. Next up, we have emerging market currencies. So essentially, this is like third world countries. I'm sure you've heard in the news, like Argentina, Brazil, Turkey, they have crazy high inflation. And in a lot of countries, their native currency is inflating so quickly that it's literally becoming worthless. And you have to carry like a wheelbarrow of cash just to buy some groceries, which just does not make any sense, right? So a lot of them, what they're doing is they're fleeing to crypto because even though Bitcoin, Ethereum, and etc., crypto is super volatile, it's still a much better alternative than their native currency, which is basically useless or worthless, right? So I think this is also some place that Bitcoin or crypto can and will and is already penetrating. So we'll just have to see how that plays out. Next up, we have economic settlement networks, and these are payment networks such as banks, clearinghouses. And I'm not going to get too into this because I'm not too educated on the matter, but that is one of the categories. Next up, we have seizure resistant assets. And this is kind of targeted towards high net worth individuals who they have so much money, so much cash that they have to store it somewhere. And Bitcoin is appealing, crypto is appealing because it's not something that can easily be seized. It can easily be transported across borders, etc. So this is also one of those categories where, yeah, I do see, some penetration, which I'm sure is already happening. Next up, institutional investments. And this is kind of like pension funds, endowments, etc. This is kind of like, it's a toss up. I'm not sure how adoption will go here, but it sure is possible. And the last one is something I'm sure everybody has heard by now, digital gold. Now, gold, the actual, gold has about an $11 trillion market cap. We all know people call it a store of value, but Bitcoin is a little bit different. They call it digital gold because you can easily transact with it. Not only is it somewhere where you can store your wealth, but I don't even know if it is a store of value because it is super volatile, right? It's not really a hedge against many things, at least not yet. The only argument there is the supply cap, which even Ethereum has a much better economic policy when it comes to the tokenomics of Ether, the asset. So as far as Bitcoin overtaking gold in that narrative, maybe it's one of the first narratives that ever popped up. So we will have to see. But the bull case here of Bitcoin taking 50% of gold's market share, I think is a bit of a reach. There's other categories that I'm kind of more aligned with, but this one, 100% sure that it will penetrate quite a bit. But 20% might be the cap. I don't know. That's just my personal opinion. So let's kind of summarize everything. Basically, these are their predictions. Obviously, everybody's gonna have a different opinion. I do love the way that they kind of presented their argument. These are great reasons or narratives that Bitcoin very well could penetrate into. I just don't know that, I don't think they're accounting for Ethereum or other crypto that kind of will also take up a lot of these industries or narratives. So on a personal note, I do think that the bear case is definitely very likely for the year 2030, just because of, you know, at least 3 or 4 of these categories, Bitcoin is a shoe-in to kind of disrupt. And even though there's not much changing to Bitcoin, that alone is also a strength. Personally, I don't own much Bitcoin myself. I'm more of an Ethereum guy. I'm sure you see the sign in the back. However, yeah, I think the 1.5 million is a bit of an overreach here. That is my personal opinion. I would love to hear yours in the comments. If you learned something, consider subscribing, and I will see you guys in the next video.